YouTube, what's going on? Welcome to another episode of the Silver and Gold Stack Attack. As always, a quick thank you for checking out the new video and for all the amazing support. And you guys already know you're part of best damn community here on YouTube, without a doubt. So before I get rolling, I just wanted to thank those who supported the last video. You guys pushed it up over 14,000 views and a ton of comments and new subscribers. So to my current viewers, I thank you. And to the newer folks, thank you as well. And welcome to the insanity. Thanks for joining on. Now, that video wasn't without some controversy since I had a few folks comment on it just because of the title, and it was clear they never even bothered watching it. One guy even accused me of being a silver broker.
Oh, Johnny, I apologize. I forgot you were there. You may go now.
Yeah, you gotta love it. You gotta love it. Just as an FYI, I always explain the video in the description and generally within the first minute of every video. So it's not like anything's ever been hidden here. The channel's pretty transparent and straightforward, and it always will be. Anyway, enough of all that. Today we're going to do something a little bit different, and that's stack 6,000 in silver and 6,000 in gold so we can see the size difference. And then we'll talk for a couple of minutes about the advantages and disadvantages of each. And all that said, hell, you already know it.
Let's freaking roll it!
Alright, so for this exercise, we're not going to include premiums for gold or silver. We're just going to strictly stack them up by spot price just to keep things simple. And the reason I'm doing it this way is because some silver and gold pieces just aren't like the others where premiums are concerned. So spot price it is. And as of the release of this video, spot price today for silver is currently $30.93, and gold is sitting at $2,632. Again, ignore the stuff I stack and just look at them by the ounces only, okay? We're going to start off with silver and see how much we need to hit 6K. Let's go ahead and stack it. And we'll just keep going here. Play the Jeopardy theme song in the background if you want. And to finish it off, 4 eagles. There you go. There you go. So if we do the math, we need about 194 ounces of silver to hit a spot value of $6,000. That's a lot of silver, folks. A lot of storage, too. A lot of weight. So in comparison, let's compare this stack to 6,000 in gold. There you go. Again, doing the math, we need about 2.28 ounces of gold to hit a spot value of 6K. Folks, this is literally the definition of size disparity right there.
Oh, behave. Yeah.
So now that we've compared the two, let's quickly go over the pros and cons of both. We'll start with the pros for silver, and again, these are just general observations. Number one, silver is tangible money. Look, no matter what happens with the economy, silver is always going to keep an intrinsic and real value. Stocks, bonds, cash deposits, those are all solid places to park your money, obviously, but they can have substantial exposure to depreciation and lose value. Silver's it's never going to go to zero. It's never going to lose value no matter what. It's always going to be worth something. Number two, silver is a great entry-level metal. Look, it's cheaper than gold, and more folks can afford a few ounces of silver than they can, say, I don't know, a quarter ounce of gold. It's a great way to get into trading fiat for something with more realistic value. Number three, silver can give higher returns than gold. Seriously. Now, we're not talking overall value here because there's no comparison in that department. Gold far outweighs silver. But I'm talking about the percentages of gains between the two, and silver often does outperform gold with larger percentage increases. And number four, it's a great savings account. Look, your silver might increase in price slower than a sloth climbing a tree, but if you look at it in a different light and forget about retiring on it, silver can make a really nice savings account if you just take money that you would have spent on useless stuff that'll never give you a return, and put a few bucks into silver. All right, so let's go over the cons for silver. Number one, silver price is slow to increase. Yep. We've all seen this. Nothing new, right? Until this year, we hadn't even seen silver go over $30 and since, 2013. That's a seriously long slump. And one of silver price's drivers is that it's an industrial metal. So if industry were to really turn down or decrease, like we saw during the COVID era, silver can take a serious tumble. And whether we like it or not, silver is more closely linked to industrial use more than anything. Number two, silver doesn't pay dividends, which is often why financial experts tell you not to put more than 10 to 15% of your portfolio into precious metals. You've got to have portfolio diversity to ensure you're earning your way to retirement, because unless silver has a massive price increase when you retire, you're more than likely be looking at breaking even, hopefully, once you factor in the loss of purchasing power of the dollar over those years. And number three, the price is easily manipulated. Let's face it, silver faces long odds each and every day to go up in value. One of the bigger hindrances for it are silver ETFs, which make it seem like there's more above ground silver than there really is. Keep in mind that the ratio for ETFs right now is about 400 ounces of paper silver to 1 ounce of physical silver. That's a killer. And until ETFs go the way of the T-Rex, this will always be a factor. Now, before we close this video out, let's go over the pros and cons of gold, starting with the pros. Number one, it's portable and easy to trade. I just showed you guys the huge difference between $6,000 in silver and $6,000 in gold. I mean, that pretty much says it all, right? You can store a lot more gold than you can silver, and there's no shortage of dealers and shops who will buy your gold at a reasonable price near or above spot, excluding collectibles. Number two, it's a safe haven for investors. Whenever the economy shows chinks in the armor, investors flood toward it, and that can increase the value dramatically. It happens every time. Stock market goes down, people run to gold. Number three, it provides solid portfolio diversity. Again, just like silver, you don't want to dominate your portfolio with gold, but it's definitely not a bad idea to diversify with some just to cover your bases, if you're able. And number four, it's more of a monetary metal than silver. Remember, we talked about silver being known for more industry than being a monetary metal, and gold is just the opposite. It's always considered more of a monetary metal than anything, excluding the jewelry industry. It is what it is. Gold is linked to money, and silver is linked to industry. And lastly, we'll finish up with the cons against gold, and they are, number one, this stuff's expensive. We've all seen the price of gold in 2024 go up quite a bit, even touching record highs on a couple of occasions. And this increase has kept a lot of stackers out of gold, and they've turned back to silver instead. Now, if we go back to just January of 2024, this year, gold was selling at $2,037 an ounce. Just 11 months later, same year, it's up probably above $600 now than it was back then. And it was a lot more than that before the elections. And this priced a lot of stackers out of gold. Number two, investors dump gold in economic recoveries. Yep, it's a catch-22. Just as investors pour money into gold when times are tough, they go through massive sell-offs when stocks and markets recover. And that can really wreak havoc on gold price. Number three, gold doesn't pay dividends. Just like silver, just on a higher price level. No matter what, gold will never do what stocks and other investments can do, and that's provide a residual income on dividends. Now, with metals in general, you're just hoping price goes over what you have into it and that the increase covers a failing dollar and premiums that you paid when you're ready to sell. And lastly, number four, performance over time. Gold might outpace other assets during specific periods while not holding up as well to long-term price appreciation. For example, if you're trying to save for retirement, putting too much money into gold could hold back long-term gains you would have gotten with stocks or bonds, which is exactly why it's important to choose the right allocation, which again is generally only 10% to 15% of your overall investments. All right, there you have it, folks. So I hope you enjoyed the silver to gold comparison and the pros and cons that we just went over. Remember, it's important not to put all or a majority of your retirement eggs into precious metals. Got to remember that. A diversified portfolio is always going to be the strongest path to a successful retirement. Just look at your metals as a savings more than an investment, and you should be okay, right? Anyway, be sure to leave a comment down below and let me know what your thoughts are. You guys know I love going through them, so make sure you sound off. And that's going to wrap it up for this episode of the Silver and Gold Stack Attack. And if you made it this far, well, kudos to you. I'll definitely catch up with you in the next episode, but in the meantime, you know what's up.
What do you want to do with your life?
I want to starve.
Damn right. Get stacked. Stay safe and be well, everyone. I am out of here. Peace, folks. Have a fantastic, safe week ahead.
You're still here? It's over. Go home. Go.
Oh, yes. And what was that beginning, middle, and end part again?